Good afternoon, every one of you here present. We are back in today's live streaming session. It will be our last live streaming session for today. So, we just want to know what we'll be going through. As our title suggests, we will be going through the futures and options. Right, we will learning about the future and option and how to trade our future and options in Indian stock market. So we will be analyzing all the prospects, right? We will be knowing what is future and option, how to trade in Indian equities, and what are the examples and where to trade the futures and option, right? We will also understand the basics and to trades on the exchanges where we can execute our trade uh, of futures and option. So we will come back to all of these things. For those who don't know me, my name is Aditya. I am your live streaming analyst for today. Basically, I focuses on the fundamental analysis aspects as well as the technical aspects, but mostly I cover the fundamental aspects because I think the fundamental aspect is the most important. We can cover many things in fundamental aspects which are not present in technical. So combination of both makes a good combo, and we can provide you with the good returns, right? And during my professional journey, I have managed a wealth of more than 100 crores and generated significant wealth for my clients. So just be assured that advice, the knowledge you will be getting from me will be tremendous, and we will be providing you with the recommendation that is genuine and you can trust on it, and most importantly you can make profit out of it, right? So this is the most important thing, to make profit in the market, right? And to understand the concepts which are happening in the market. So, starting from the beginning, what we will cover today, we will cover the stock performances, what performance we have achieved till now, what are the current holding we have in stocks, right? What are the latest updates in the market? We will be learning about futures and option, and how to trade futures and option in Indian stock market, right? So we will cover each and everything, so stay updated till then. So we have seen that we have few scripts in our holding. Let's see what it has done for today. Going to the trading view, we are seeing there is a momentum in our stocks. There you can see most of the stocks were negative in the afternoon session as well, but now it is showing its remarkable performance. IP ring is positive 2.17%. Hindustan Oil Exploration, just look at the Hindustan Oil Exploration. It is doing great. It has increased by 5% in the last trading hours. Just few trading hours till afternoon, we were observing that many of the stock, almost each and every stocks were negative, and now we are seeing there is a momentum in many of the stocks. IP ring is positive. Hindustan Oil Exploration has gained 5%. RBL Bank is positive. It has gained more than 4% in it. So just look at the momentum as the market was falling down in the afternoon, and it has just maintained its position. We are seeing a momentum in our stocks as well, right? And we have known that FII have started buying heavily in the market. So maybe these are the few reasons. Like yesterday, FIA have net bought only, and maybe today also they have started buying. So we are expecting positivity in it, right? So from Poonawalla, RBL Bank, Aventel, Dev Plastic, Hindustan Oil Exploration, we can see one, two, three, four of our stocks are positive and four are negative as of now, right? Arkiply, we have already booked profit around 115 and 116, and we are able to exit at this position. So We are safe in our reply. The fall will be not affecting us anymore. Now, looking at the portfolio which we have a balanced portfolio, right? The balance holding, the RBL bank is doing great, the Hindustan Hospital is gaining momentum. Just look, RBL bank was trading around 170 in the morning, and after that it has shown its value and grown, and it is showing its continuous momentum. From the level of 150, we are seeing RBL banks to grow and grow more. So be rest assured, whatever holdings we have as of now, whatever the stocks which are pending to be hitting the target price, we will be easily able to exit that stock and make profit in it. So just remember, each and every one of us in the market is here for making profit. We are not here to make loss, right? We are here to make consistent profit out of all the trades which we have performed. Just look at the trades which we have done. Out of the 47 trades which we have performed till date, we are able to exit 37 trades have been closed till now. In just 2.5 months, we have been closing 37 trades, which had a combined return of 227%. Just look at the profitability which we have generated. Each and every calls we generate, each and every recommendation we come up with many factors. We give you the stock script where it is listed, either it is in NSE or BSE, the date have been provided, the opening time, the time which we give you the recommendation, it's all on live streaming, right? Nothing is hidden in our streaming, so everything we give it on a live streaming. The opening time is given, the position, the direction which we make, either it is a long or short, the direction is also given, the entry point is also given, the closing date, take profit, and the profit mark. So just look at the positions which we are making. We have for example Annapurna, we have our direction made long at 375, and we were able to exit at 395 at a profit rate of 5%. So all these things are mentioned to you so that you are able to make consistent profit in the market and you don't face any loss, because and you don't mistake any of our recommendation. If you are trading by yourself and you are making a mistake, just remember, every mistake has a price in a market. Every mistake you make will be you will be facing a tremendous loss in the market as well. So these are the things which we have seen for you, and uh, which have been providing you with a consistent profit. So just remember, be with us connected. Also, we want to let you know that whatever session we are having as of now, it is totally free for next 2 3 weeks. So take most benefit out of it. Once we will go to the VIP mode after 2 3 weeks, we won't be able to provide it in a free of cost, right? We will be going for the VIP mode, and will be only dealing with the clients who are serious in making money. Just remember, we will be dealing with the clients who are serious in making money, not just waiting for the time in the market. We will be dealing with the serious client. Just remember that. And once we go for that, we will be also, do not only deals in equity market, we also deals in forex market as well, we deals in commodities market as well, gold, metals, forex, USD, JPY, INR. There is a lot of potential, there is a lot of leverage we get in the forex market, and once we start trading on that platform, we will be making huge profit out of it. So just remember why we are here. We are here to make profit, a consistent profit in the market, right? So, starting, we have shown our profit tracking strategy. What are the profitability we have achieved? How many trades we have closed, and in what months? And what are the current holdings we have as of now? So, these are our current holding. Now, let's begin with the futures and option trading in the Indian stock market. We will understand the basics and how to trade on uh, exchanges. So let us understand what is derivatives. What do you mean by derivatives, right? Derivatives. I will just adjust it so that you are able to look more in a more well manner. So so we will be starting with the derivatives, right? So what is derivative? It is a financial instrument that derives its value from an underlying assets. We have an example like stocks, right? How the derivatives will you derive? We need an underlying value of an asset. Suppose we have a stock of Reliance, we can derive its value from it, and we will be generating futures and option. But an underlying asset has to be there, a Reliance. For that only we will be trading futures and option. And for Nifty also, we are trading an index. We have a future and option, but it has an underlying assets which is called Nifty. So this is the basic concept of derivative. It should have underlying assets in it, and then we will be able to trade on a derivative market for that asset. And we will be predicting either it is will be going low or high. And derivatives always have an expiry date, where we will be able to know if you are trading a futures or option in Indian market, it will be expiring in next 3 months, and we will be able to trade for next 3 months only. For futures or option is stocks. For commodities, stocks and indices. For commodities, it is different. We can trade for more longer period of time. We will know each and everything in detail in coming times. And examples are stocks. For stocks, we have seen that we have a derivatives like Reliance, TCS. We have a derivative for Tata Consultancy Services. We have a derivative for Adani, Adani Enterprise, Adani Green. We have derivatives for all these scripts, Mahindra and Mahindra, Bajaj Finance. Many stocks are there which we have derivatives for. So, and where we have the derivatives, we only get derivatives for not all the stocks listed in the market. We have 6,000 plus stocks listed in the market, but all of them don't have the derivative actually. We have derivative for the few stocks, the large cap stocks which are stable, which have some stability, where balance sheet income statements are really good. They are consistent in market and providing you with the good stability. And for that stocks only we have derivatives. On and around, if we look at the Indian market, we have a derivative of just we have a derivative for on and around of 200 to 400 scripts, right? 300 to 400 scripts, we can say. For that only we are able to have the derivatives. Now just look at the why we should trade in future and option. There are three factors where mostly we gain for future and option. Like we can use for hedging. Suppose we are having a portfolio of rupees 10 lakh in our holding, right? And you assume that the Nifty is going to fall. So what you will do now? Even now you don't want to sell your holding, but once you want a protection from the fall in portfolio, right? When Nifty will be falling, your stocks will be falling, right? And you will be making loss on that, but you want to hedge that. What you will do? You will just short Nifty. Suppose you short Nifty of rupees 1 lakh, and Nifty falls around 500 points, taking a consideration of 50 lots, you will be making a profit of around 1 lakh rupees. And if the Nifty falls 5%, you will be facing, suppose your stock also falls around 10%, you will be hedging that portfolio, and you will be adjusting your loss accordingly. The loss which you have faced in the stocks will be adjusted by the profit which you have made by hedging. So this is the simple concept why hedging is important. The loss is fortified by the profit you made, and it can't be the perfect. The losses and profit can't be perfect, but if we look, it can be hedged accordingly. So just remember that you need to be hedged if you feel that market is going to be up or down as of now. So this is the example of hedging. If we come to the speculation, suppose even if you are having a holding of 10 lakh rupees, and you want to speculate that if and you want to look how speculation goes, right? If you are thinking that market will increase as of now, Nifty is trading around 24,600. You are having a holding of 20 like 10 lakh rupees, means that if the Nifty grows and if the stock grows, you will be having profitability. But you want to try some speculation, you want to gamble in it, right? So what you will do, you will buy the Nifty futures, right? You would buy the Nifty futures, and if Nifty gains 500 points, you will be making the double profit out of your portfolio as well, and in the future market as well. In the portfolio, whatever the stock amount it will grow, you will be gaining from that. And in futures, if 500 points grow and if the lot size is 25, you will be automatically making a profit of around 60,000, right? How we are coming to the mark of 60,000? Nifty has a lot size of 20, Nifty has a lot size of 25 units, right? So if you multiply 24,000 by 25, it comes out to be 6.5 lakh, around 6 and 6.5 lakh, 6.25 lakh. And if there is an increase of 500 points in the Nifty, that means Nifty has increased 2 to 3%, and we are getting a on an average return of 50,000 overall on one lot. So that's the speculation you are putting into and getting some profit from it. Coming to the arbitrage, what is arbitrage, right? How to differentiate, like what is arbitrage? We can see that many currencies are trading at a different rate. Suppose JPY INR is trading at the level of 4 rupees, but INR and dollar are trading at the rupees of 5 rupees, and INR dollar are trading as a rupees of 3 rupees. So if there is a price difference, we have to maintain what JPY INR, INR JPY, and INR USD is having the price difference. Is there in a price difference? So we can arbitrage that. We can take the benefit of the price difference. In one market we will be buying, and in one market we will be selling. So we will be gaining concepts into the arbitrage and make profit from it. So these are the things which we have to look. Why arbitrage is important? We can make a quick profit in arbitrage without facing any loss. In hedging, you can face loss. You can hedge your portfolio. You are just safeguarding your investment, right? By putting some risks into it. In speculation, you are totally risking your amount. You are just speculating. You are playing a gambling in the market that it will be going up or down. And arbitrage means you are making a quick profit without any gambling. It is the safest way to make profit through arbitrage. Now, what are futures, right? What are futures? What do you understand by future? It is a We have understand about the derivatives. It should have an underlying value. We will understand about the futures. What it is definition? It is the futures contract is standardized agreement to buy or sell an asset at predetermined price on a specific date in future. So as a definition, we have future is a standardized agreement to buy and sell an asset at predetermined price on a specific date in future. So for example, we have like Nifty 50 futures contract expiring on a month end. For December month, just example, for the month of December, we have our Nifty 50 expiring at the date of 24th of December, right? So on 24th of December, the Nifty 50 futures will be expiring, and on that day, we have we can either we have to settle that amount on that day. If you have bought a few Nifty futures, we have bought. Suppose we are going long in the market, we are positive about the market, we will be going long, and on a specific date we will be providing you with the Nifty 50 futures, right? So just remember, we have to settle it on a specific date till 24th of December. If you have not exercised, you have not settled your amount, it will be carry forwarded, and we have to be it will expire. Whatever the profit and loss we are having in our portfolio, suppose you bought Nifty at 24,500 and Nifty has reached a mark of 25,000, so you gain 500 points into it, right? 500 into, just multiplied by 25, we will be coming out to the profit of around 62,000 profit. So we have to settle at that amount. And even if the Nifty falls to a level of 24,000, suppose you have bought Nifty, you have gone for a long position and you have bought at 24,500 the Nifty futures, and it has fallen down to the 24,000 mark, so you are facing a loss of 62,500. Now there is no other option except to sell that future and buy the next month future for holding your positions. You cannot hold your positions for the current month, you can just renew for the next month, right? So this is the example of Nifty futures. You cannot hold it, you have to settle it, and it, because it will be expiring on a certain date, so you have to look into it whenever you are trading in futures, whenever you are trading in Nifty, whenever you are trading in options, it has an expiry and you have to settle it before that. Otherwise you may face huge loss and you may face a huge profit out of it also. So what are its features? What are the features of futures? So it trades on exchanges. Futures are mostly traded on exchanges like NSE or BSE. Will just add that where it is traded. It is traded in NSE. It is traded in NSE, BSE. So it is traded on exchanges. What the futures are traded on NSE, BSE, and for multi-commodity exchange, we have many uh, exchanges where we can trade futures and option for commodities and forex market. But for forex as well and for stock as well, we can easily trade in NSE, National Stock Exchange, and BSE. These are the two popular stock exchanges in India. So we have also done with the example. And what does it provide? It provides you the high leverage, right? Just just an example, we are buying a Nifty 50 of around up of around 24,500, right? And if you buy Nifty 50, just we will calculate and show you to you. If we buy Nifty 50 25 lots at the rate of 24,500, we will be having amount of 6 lakh 12,500. But what we are paying? We are paying only 20% margin of it. What we are paying? We are paying just 20% margin of it. What is the amount? We are just paying 1 lakh 20,000 rupees for its trading and investment, right? For its trading. So look at the amount of profit which we are making. We are getting it at just rupees 1 lakh 20,000. We are paying the margin amount of just 20%, and we are getting to trade Nifty, right, of value which has a value of 6 lakh 12,000. So if you are making a 10% profit in 6 lakh 12,000, we are making a profit in our original value which we have invested 1 lakh 20,000. So our 1 lakh 20,000 increases to 1 lakh 80,000. That means it has a high leverage, right? And that is equal risky too. If you are facing a 10% loss in 6 lakh 12,000, you will be, your value will be decreased to from 1 lakh to 1 lakh 20,000 to 60,000. So you have to look into the parameters. It has a high leverage, it has a high risk also. If you are having a leverage for anything, you will be facing risks for it as well. So what are the obligations to we have the power of obligations in Indian market. We have the power to oblige, we have the power to be execute the trade or not execute the trade, right? Now coming to the options. What are options? Option gives holder the right but not the obligation to buy call option or sell put option as an asset at set price. But it what it provides you holder the right but not the obligation. It doesn't provide you with an obligation, but you have the right but not an obligation. Thus understand these differences. You have the right, but not the you just don't necessarily need to oblige to that to buy, call, or sell put option as an asset as a set price. You can just buy and sell during the market, even when the liquidity is good. You can just go into it. And what are its type, right? So talking about the type, call option has right to buy, put option has right to sell. So call option, what does call option has? It has a right to buy, and put, what to put option means, put option has right to sell. Suppose for example we have a Reliance 3000C. It is a call option with a strike price of 3000. So we will be broadly explaining this example as well. Suppose you bought a Reliance at 2900 mark, and you have currently Reliance is trading at the mark of 2900, and you bought a Reliance C, right, 3000 C at paying 20 rupees of premium, right? You have bought Reliance C by paying 20 rupees of premium. What will be happening here? What will happen here? You will be getting profit if Reliance reaches till 3000, right? Even if Reliance expires, Reliance increases a bit, or if fall downs, you are more profitable. Even if it increases or stay constant, you will be making profit in Reliance. You will be making what profit? You will be making a 20 rupees premium which you have got. You will be making profit on that by selling the Reliance option. And when you will be making profit, you will be making profit when Reliance crosses more than 3000 level. Suppose you have bought Reliance 3000 call, it is trading around 2900, and Reliance reaches to a level of 3100 as of now, right? So you have paid just 20 premium, and you will be getting a premium of rupees 100 when it expires at the level of 3100. In between that also, if it reaches around 100 and 120, you can sell and make quick profit in the market. You will be able to exit and make some gains in the market as well. So these are the benefits of option and futures. So what are the key terms in futures and option? Right, we have a strike price. There is a predetermined price where we look into the stock, right? Strike price means the price of our underlying value. Suppose Reliance is trading at 2900, so that is a strike price, and it is predetermined. That is a price of an underlying assets. What are its premium? Premium, what do you mean by premium? The cost of an options contract, right? Whatever the amount we pay, the premium we pay for buying an option. Suppose we have given you with an example of Reliance. For Reliance, we are paying the premium of rupees 20, and if it expiring as 3100, we are getting a premium of 100. So 20 which we have paid previously, we are getting, that's the cost of the premium. What are its lot size? What is the minimum quantity we can trade for an underlying asset? As we have told that, suppose we are trading Nifty lot size is 25, so we can trade only in the multiples of 20 size. So that is the lot where we are able to trade Nifty at 25 by paying the margin of it. Nifty we are trading at a value of 6,12,500, but we are paying only 20% margin, which is 1,20,000. So that's the margin we have, and whatever the profit we will be getting at the at 6 lakhs, not at 1,20,000. If you are gaining 10% on 6 lakh, it is added to your 1,20,000 value, right? And if it making a loss of 10%, it will be deducted from your value of 1,20,000. So it has a high leverage as well as it has a high risk as well. The profitability and the loss making capacity is very high in both the cases. So we have an expiry date for future as well. What is the expiry date? The date when the contracts end. Suppose we have a expiry date for Nifty 50 as well. If we trade in futures and option, it will have an expiry date for the month of December. We can trade futures and option in stocks and index for next 3 months. Suppose we have this current month December is going on as of now. For December, we are looking that we have expiry at 24th of December, and on for we can trade for January as well, and we can trade for February as well. So these are the 3 months of expiry we can get, and we will be able to trade on that. And what are open interest? Total number of outstanding contracts, right? What are the contracts which are outstanding? The contracts which have been made in futures and options. Suppose there are many contracts which are being made, the number of trades have increased, many buyers are there, many sellers are there in futures and options. So we will be having an open contract where there will be an increase in outstanding contract as well. So these are the things which we have to look. And what is mark to marking? Daily settlement of profit and losses. Right, in futures and option we have a facility of daily settlement, right? In not in options position if you see, but in mostly in futures positions we have to m daily settlement is there. Suppose you make a profit of 50,000, it will be directly credited to your funds, it will be positive for you. And suppose you make a loss of 50,000, so it will be deducted from your value, and you have to add that amount. If you already have that amount, it is okay if you have the extra fund, and if you don't have the extra fund, you have to add that amount to make sure your investment remains safe and you are able to carry forward that futures. So remember to make your daily settlement and look into daily settlement that you are making a loss or profit in the stock. So how you will be able to trade futures and option in on Indian exchanges, right? How to trade futures and option, how to trade futures on Indian exchanges. First, we have to what we have to do, open a trading and demat account with a broker. What are the brokers? Brokers we have traditionally the large brokers are Motilal Oswal, Angel Broking, Sher Khan. These are the traditional brokers. Going for the bank brokers, you can go for Kotak Securities, you can go for ICICI, you can go for SDFC Securities. So these are the securities which we have. They are the bank brokers. Next, we can go for the brokers like the new brokers. We have the discounted broker, Jirodha. The Angel is also into it. Upstock, 5 Paisa. These are the discount broker in the market. So these are the brokers which we have in the market where we can open our trading and demat account, and from there we will be able to trade our stocks, trade our futures, trade our options on that. And when we have to choose the desired contract, like we have to look where we want to trade, either in Nifty 50, in Bank Nifty, or in stock futures. It is not written here, but we can also trade in stock futures as well. For example, Reliance, TCS, we can trade futures of that. And for Nifty 50 as well, we have already explained what is the lot size, how much profit we can make by the fall of 10% in the Nifty 50 and the fall by the 10%. We are not making profit. After the fall of 10%, we are making a profit of a loss of 10% if we have gone long in the Nifty. And if it falls by 10%, we are making a loss of 50% in our overall value. So just remember, the overall loss and profits are very high because we are getting a high leverage as well. So these are the things which you need to keep in your mind to remain safe, and it is a very high risk trade. So only it is advisable for all the high risk traders, those who want to trade intraday, those who are very short term traders, to enter into the futures and option market and trade, because it has a high leverage, it comes with a high risk and high profitability, right? So we can choose the desired contract where we want to trade, either in Nifty or Bank Nifty. Place your order, either you can buy or sell the options and futures. If you are bullish in any stock, you will be buying that options or future. Suppose you are bullish in Nifty, you think the market will grow, you will be obviously going for a buy, but you can also sell the Nifty futures. And what will happen while short selling the Nifty futures? We will be able to make profit when the market falls, right? And here reverse thing as well. When we buy, when Nifty increases, when we buy the Nifty futures, when we go long in the Nifty futures, we make profit when the market grows. And what happens in short selling, when you have short the Nifty, right? When you have sold the Nifty before buying, right? You have sold the nifty directly coming to the market. You have short sell the nifty as of now. What will be happening? You will be making profit when nifty falls down by whatever points you are expecting. Suppose it falls down by 500 points, you will be making profit on that, the 500 into 25, right? So you will be having profit on that. And for rest, you'll be not having profitability. So just remember, whatever profit you are making from the fall of the nifty in short selling, not in the gain. If it is gaining nifty, suppose when you have contracted at the month of December and nifty you have short sold, and now the nifty has increased by 5 to 6%, so you will be facing a huge loss in your holding, right? You will be facing a loss because nifty has increased in this case. So just do remember, whatever your prediction, whatever your conviction, you are going and placing the order in a right manner so that you are able to get exact result what do you want, right? Also, we have to monitor our day to daily mark adjustment. As we have already told, we have to look at our daily adjustment. Either you are in profit, either you are in loss. If you are in profit, you don't have to worry, right? You don't have to worry. You will be safe. You will be carry forwarding your trades. If you are facing any loss, if you are facing any loss, you have to be worried. You have to add funds. And if you have already extra added your extra funds into the demat account, you don't need to worry. But if you have made a loss of 20,000, suppose, you have to add that funds immediately to carry forward your position next day, or the very next day in the morning session your amount will be deducted. Also, in step 5, uh, we have to square off or let it expire. What we can do, we have to square off before its expiry. We can square off the position. Suppose whatever the long or short we are having, if we can square off, and whatever the profit or loss we have on that options and future, we can get on our value, right? We can get that profit in our demat account, or we can wait for the expiry. We can wait for the expiry to happen, and on the expiry date, whatever with the position, suppose you have bought a Reliance 3000 call when the strike price was 2900, when the Reliance was trading at 2900, and it has reached now 3100. So you will be getting, and Reliance had a lot size of 50, so you will be automatically getting your profit of 5000, 100 into 50, 5000 in your demat account after it gets expired. And if it is in loss, if it expires at 2900 or below 3000, the premium value will be zero, and you will be getting nil profit, and you will not be making any profit from it. So we have discussed about the futures, how to trade futures in Indian market, Indian exchanges. We have to first, we go to opening a demat account or trading account with a broker like Motilal, Kotak, or etc. brokers. Many hundreds of brokers are present in the market. You can go to anyone and make profit out of it. You can choose the desired contract where you want to trade. Either it is in Nifty, either or it is in Bank Nifty or stock options. You can place your order going into that. Either you want to buy, you want to sell, either you want to go long or go short on that futures. After that, you have to monitor your mark to mark margin to make adjustment. If you are profitable, it's okay. Your futures will be carry forwarded to next day, and you will be able to trade next day also. If you have faced losses in your future, you have to add that fund so that your futures are carry forwarded. And for the next very part, step 5, you have to square off or let it expire. You can square off and wait for the expiry to happen so that you are able to get the credited amount which you deserve, like which you have made profit. And if you have not made profit, you will be facing loss on that. So these are the things which you need to keep on mind. Now, how to trade options in Indian exchanges. Now, open a trading account with FNO, right? You have to open a trading account with FNO, future and options enabled. Like we have already discussed, you can open trading accounts with Kotak, you can trading accounts with Motilal. So these are the major players in the Indian market, and trusted. They have a very good features in terms of app as well as trading. So we have to choose the underlying assets and types of option. What are the underlying assets we have and types of options they have. So on what we have to trade, what we are planning to trade, either it is a nifty, bank nifty, or stock options, we have to choose underlying assets and the type of option. What do you mean by type of option? We have to decide the strike price and expiry. Suppose you are making a profit. Suppose you are trading, you want to trade nifty 50 and you expect the nifty 50 to gain quick momentum in the market. What you will do, you will just go to the nifty 50, you will just look at the expiry, which expiry you are expecting, where the nifty will grow or fall, right? If you are expecting that the nifty will be will be gaining some momentum, what you will do, for example, nifty is trading around the level of 24,000 as of now, and if you are expecting nifty to grow, nifty to make 500,000 points quick gain in the market, what you will do, you will do the buying of that stock option, you will buy that stock options, right? And now what you will do, you will buy that stock option and wait for the premium to grow with the call options which you have bought, suppose at 100. If the nifty grows to a 500 points, you will be getting a profit of, right, you will be getting a profit of around 500 points. So the 100 premium which you have paid will be increased to 500 and you will be making a profit of 500% in just quick time, whichever the nifty grows. And if it falls and if it stays stable at that point only, you are not going to make any profit, your value will become zero and you won't be profitable on that. So just remember, options are more risky than futures. You can only trade futures if you are having a good amount of money. Options are there, you can pay the only premium price in the market and get the options, and there is a quick, if there is a quick momentum in the stocks, you will be able to gain it. So these are the things which we have on futures and option, why we should trade futures and option in Indian exchanges, right? So now look at the underlying assets and the type of options. Like we have already decided what will be the strike price and expiry, you have to choose that. We have to pay just the premium amount and we can execute the trade. Also we have to manage your position, like we have to exercise it. If you want to exercise, you can exercise your option, either you want to sell it or let it expire. If it expires, you will be getting the cash amount, it will be cash settled, and you will be not getting any stocks on that, because it is a call European options we are following and it is cash settled, right, from when it expires. What are the examples of future example? Like suppose we have bought nifty 50 futures at 19,500 with a lot size of 50, price rises to 1900 600. So what will be the profit will be 5,000, right? Not 100, because the lot size we had of 50, and if it rises to 19,600, we are making a profit of 100 into 50, 5,000. So this is the profitability we are making. Suppose it increases to 20,000, from 19,500 increases to 20,000, so we will be making a profit of 25,000. Just suppose price rises to, so this is the price we have seen. If price have risen to 20,000, right? 20,000 price have rises. What we will see? We have see the price going to, just look at the, so automatically we will be having a profit of 25,000. So just for example, I have shown you, if you have bought a nifty 50 futures at 95,500, it has only increased 500 points, but you are able to make a profit of 25,000 from it by multiplying it by the lot size whatever we had. So this is the profit amount we have for nifty futures. So just understand, whenever the underlying assets are increasing, we are not only making the profit from it increase, we are making profit by multiplying it by the lot size. This is the lot size we have, lot size of 50. So whatever profit you are gaining here will be multiplied by 50, and even if you face a loss, you will be gaining a loss from it. Suppose price falls. ठीक, we will explain the price falls. Suppose price falls, price falls to 19,000. Price falls to 19,000. So what will be the profit? Just look at it, 19,000, and the profit will be minus 25,000. So the profit will become negative. The profit will be negative for us. It will be negative minus 25,000. So this is just for example. I have changed. I have edited your practical examples, right? For to make you understand more properly what are the losses and profits you can face. Even after the fall of 500 points, you could make a significant loss of 525,000, and even if increase of 500 points in the Nifty, comparing with this lot size of 50, we can make a profit of 25,000. So these are the risks we have in the market to be maintained. We have to look at the risk taking appetite of a profile and then trade accordingly. If you are a high risk client, you can easily go for futures trading, you can easily go for options trading. If you want to gain some profit from the quick gains, right? And if you are safe investor, if you want to invest for a long term, you should be avoiding futures and option. But I recommend to use future and option not only for speculation, not only for gaining some insight. You have to use it for hedging purpose also, hedging for hedging purposes as well. So you are hedging your profile, hedging your portfolio accordingly. Now now suppose we have an example of option. What example we have for an option? We are buying a call option for Reliance with a strike price of 3,000 at by paying a premium of 8. Now suppose the stock spot price rises to 3,100, intrinsic value is rupees 100, profit of 100 in minus 50 into lot size. So what profit you will make? Suppose it has a lot size, we will add with lot size, with lot size of 100, right? So we will just multiply that lot size of 100, and it will equals to 50 into 100, 5,000 rupees. So this is the profit we can make. And if it is, and suppose the stock price with a lot size of, we have paid a premium of rupees 50 with a lot size of rupees 100, and if the spot price rises to 3,100, it intrinsic value, the premium which you have paid will be increased to 100. And what will be the profit? 100 minus the premium which we have paid, 50 into 100 into lot size. So you will be getting a profit of 5,000 into it. And suppose you have the spot price, right, it has decreases or it stays within the range of 3,000, it is below 3,000 only, right? It is below 3,000. Just will mark that. It's not coming up. Just look, yeah. So it is around 3,000 stock prices, trades to 3,000. So intrinsic value will be 0 because the premium has not increased. The profit will be, it will come to the negative. We are making 0 profit out of it. 0 into 50. So we are making a loss of minus 5,000 here, because we have already paid the premium. The intrinsic value becomes 0, and if you minus 0 minus 50, it will be minus 50 into 100. We are making a loss of 5,000. So you have to look what are the loss profit margin we can make, but we can also make profit huge amount. Our losses are minimum in option if we go for buying, but the profits are unlimited. This is the concept we have for options. We will just go back with the examples which we have made. We'll just change it to the previous value so that you won't face any problem, right? So these were the values which we have. Now what are the advanced? So you have understand with the practical example what are the lot sizes, what will be the profit and loss. For example, we have bought a Nifty at 19,500, at a lot size of 50, price falls to 19,000, profit will be, price rises to 20,000, profit will be 20,000 minus 95,500 into 50, prices profit will be 25,000. And for options, we have a call options for Reliance with a strike price of 3,000 and a premium of 50. So spot price rises to 3,100 and intrinsic value is rupees 100, profit will be at this. So I will show you with an example. Just we will go for the example, we just go for the NSE site where you can find the option chain. Just look at it. We will go for Reliance. So it has a stock future, as you can see. We have to look for the futures. We have already explained what are the futures. Suppose you are buying a future, it has an underlying value. Underlying value is trading at. Just look at the underlying value. Reliance value was at and 1285, and the opening, the previous close was, the last trading price was 1293. Suppose we made a profit on it, we have a lot size, a quantity of 500, we can trade in a multiples of 500 Reliance Industries. So you'll be making profit and loss on that. If we have any options, if you are trading around, suppose we have traded around 13,000 call, we are expecting the price to grow, so we have to bid at this price, we have to bid or ask. The quantity is already given, it will be 500, the market lot size is 500, open interest, the contracts have been made 23,000, right? And to traded volume is 28,368 crores. So these are the values which we have, and these are the prices. And if it increases more than 1300, suppose it falls down to, it increases to 1400, by paying the premium of 18 rupees, you will be making a premium. It will, underlying value will go to 100, and you will be making 100 into 500, 550,000 rupees of profit. So you have to look into it, what are your profitability and what are your losses in the market after trading in the options. Now we have what are the advantages and what are the risks for the options trader. We have advantages for higher leverage, for higher returns. We can go for option tradings to gain higher returns. We can hedge against price movements. Like suppose you want to gain some hedging into the, you want to be safe from the your portfolio from falling down a much and increasing a much, so you can hedge it against by buying nifty futures. You can go long, you can go short, right? And you can hedge your portfolio accordingly. We have flexibility in strategies, we can go for anything. We can either go for long, we can either go for short in futures. We can there are many strategies in option as well. You can bull call spread, you can go for beer call spread, you can go for many spreads are there, right? So there are flexibility in strategies. It's not just we are buying and selling, we have the strategies, we can put the strategies into the role and make profit. What are the risks we have? We have high volatility. What are the high volatility? Potential for we have a high volatility because we will be making some huge amount of profit also and huge amount of loss also. So these are the volatility which we have to look. And potential for unlimited losses in futures. So what are the potential for unlimited losses in futures as well? Because if you have short sold the futures, right? So if the futures doubles its price, so you have the you will be facing a unlimited loss in that futures as well. So just remember, you have the potential for losing all your money in future if you are short selling that position, and if you are buying that position, the loss will be limited, but it will be a huge amount, right? It will be, the stock can only become zero, it will not go in negative, but in For if you are short selling, the stock can double triple itself and you will be facing a huge amount of loss into it. So just remember, you have to maintain some strategies, you have to put some stop losses into the future when you are short selling, so that you are able to gain from it and you are able to trade accordingly. Now, what are the premium can erodes in option? Suppose that you have bought a Reliance, but you are not getting any premium, so it can be eroded. What are the tips for beginners? For persons who are new in the market, those who want to just gain insights into the options, what are the tips for them? Start with the paper trading and make your strategies accordingly, right? You have to start with the paper trading, make your strategies accordingly. Focus on liquidity stocks where the options is trading. Suppose bank nifty, they have the more liquidity as compared to any other option, so you can trade on that, right? You have to be focused on that and trade around where the underlying value is trading. Suppose bank nifty is trading around 53,000, so trade around 53,000 only. Suppose between the level of 50,000 to 56,000, right? And use stop loss to manage risks. So what stop loss we can use? You can use the stop loss to manage risks as well, right? Because we won't be facing huge losses on that. As we have told, when you short sell the futures, you can face a huge amount of loss. But once you put your stop loss, your loss will be limited till the stop loss point, right? So you have to look what are the losses which you are making, what are the profitability which you are gaining, and understand the Greeks. There are many concepts in the market. It is delta, theta, beta, gamma. Everything is there in the options. You have to understand these gimmicks so that you are able to understand the options properly. What is happening? What are the open interest it is falling into? What are the regulatory frameworks in options? Right. What is the regulatory framework? SEBI is obviously the regulatory in all the futures options for stocks, whatever the investment we have in the stock market. SEBI is a regulatory. It oversees derivatives in India as well. And for the stock market also, the SEBI is the main mechanism which looks after all these things. For coming to the exchange, we can trade on NSE or BSE. The futures and options are available in NSE as well as in BSE. So you can look into that and trade accordingly. What are the margin requirements? So we have to maintain the adequate margins to carry forward our positions in futures. We have seen there is a margin requirement as well. For tools and resource, where you can trade accordingly, right? Tools. What are the tools and resources we can have? So. You can use trading platforms like Zerodha, Upstock, Angel One, market data sources like NSE, Money Control, and Bloomberg. These are the sources of resources where you can get. You can get education from online books, webinars. You can go for the NISM courses as well. Here you will be giving more insights into it, right? And what are the conclusion? What are futures and option and how to trade them? So just remember what is the futures and option and where you want to trade them, right? We have provided you with the all the recommendations, like what are futures and option from the beginning, importance of risk management, right? Importance of risk management. And we have at last call for action. Start with small trades and gradually build your expertise. We always recommend to go small in the options and future market, so that you are, once you gain insights into it, you will be able to you'll be able to start your small trading journey, right? And after gaining insights, you increase your capacity and trade more in coming future. So you have to start your small trades and gradually build your expertise into the trading market and gain money out of it, right? So what we have covered, we'll just wrap up. We have covered with the futures and option trading in the Indian stock market. We have done with derivatives. We have explained what derivatives is, what are futures, what are options, right? You can just take this screenshot if you want, any one of us, to further proceeding for further learning the key terms in futures and option, how to trade futures and option in Indian exchanges, how to trade few options in Indian exchanges. Practical example we have seen, advantages and risks of it, tips for beginner, how to start trading for a beginner, regulatory framework, tools and resources. What are the tools and resources we can use for futures and option trading? Conclusions, right? We have provided you with the conclusion about what is future, what is options, how to trade it, when to trade it, where to trade it, and what are the strategies and how to execute that trade. We have provided you with all the details to trade futures and option in Indian stock market. So when you're starting, start small and increase your appetite gradually. So you don't face any huge loss at the beginning itself and you're out of the market. Go slow, increase your risk taking appetite slowly, learn from the market, and start and gradually build your expertise. So, thanks for watching this presentation on futures and option in Indian stock market. We will be coming up again tomorrow live at 10:15 a.m. and we will be guiding you with more insights. Till then, stay tuned. Happy investing. Stay